Good morning, everyone, and welcome to the European crossover webinar. We've seen markets really quiet. Gold just began to slide just a little bit, and bonds have really had some good moves overnight. Came into some resistance here at 66.08 with 66.06 at 23%. Of the yesterday's low of 64.17 to the 71.17 on here, so a little bit of resistance, but markets are definitely quiet. And something about BOE says aims to complete changes. Also, the Boon, the yield on the Boon fell back into negative territory a little while ago, which tying in the same time with the bonds making this run up here to 66.08. Probably a pretty good area. Only I would have liked to have taken a short there, to be honest with you, but I thought in this quiet market and also on a Friday after setting in that double bottom, there is some additional resistance. I think it's at 66.15. I think I'll play it a little bit more on the cautious side since overall the markets are quiet. At best, I'd only have 2 ticks on that. Well, actually, maybe 3 ticks at this point on the trade, but I thought I'd err on the side of caution, being a Friday. So we'll go and take a look at news. I did get a message that they had some kind of failure or something like that. Oh, on it. I should just, well, I probably had to reboot my, here we go. Oh, here is that same story, so we'll take a look here anyway. But it's dead. Dollar's on a course for a fall for a second week against the yen on Friday after U.S. retail sales quelled lingering bets on the Fed's raising rates, interest rates next week, while faith in Bank of Japan action against its currency also seems limited. I tweeted this out earlier because I just think it's ridiculous. And we got the gold right now with a 15 handle. And Euro's starting to slide right now, and Swiss is taking off. So we're seeing a little bit of movement right now. It's over, that trade. I keep telling y'all, I said it yesterday, they said the day before, it's over, finito, game over. Look, here's my take on that, and I was even, victim to that, but it was a very small loss, but I was pretty pissed off because of where I came in. I thought it was a fantastic area that I came in at. Actually, I was up on the trade for a little bit, and then it went negative. Look, I'll just give the Cliff Notes version, but like I said, the yen, the BOJ did well by not talking or saying anything when the yen was trading around 100. Then Yellen and Fisher give him the good boost, and then Hamada and Sugo give it an extra kick. And on NFP Friday, we're at 432. Morgan Stanley, they're looking for 108. People are getting long the dollar yen, or short yen. And then the following week is accompanied by in-house fighting in the government over QE, and we lose 300 pips. Listen, folks, you don't lose 300 pips off those highs, and people say, wow, I just can't wait to buy the dollar yen again. People are not going to go and get fooled, okay? And they're fed up with the BOJ and all the bullshit, you know what. So think about it. I mean, if this market looks like it's really going to take off and we're really running, and then you get that, and then you lose 300 pips from those highs, and you think, what, someone's going to say, okay, I'll come right back and buy the dollar yen. Ain't going to frickin' happen. And what I told you is exactly what's happened. I mean, I haven't done anything in dollar yen because, to be honest with you, I was just too pissed off. Even though, like I said, I came in at a fabulous area. I think got long at, I think it was 223, 226 or something. I was only looking for 20 pips, and then I'll reassess the trade again or jump back in. And I think I got, at the max, I was up 17 pips, and then kaboom, it all starts coming right back down, starts to slide. We're the 2 teens. I'm like, well, okay. We'll go to 2 single digits. I'm like, well, this isn't good. and then I get stopped out early in the Asian session. And then after it stopped out, it wasn't like they took off. They fell like another 50 pips. I mean, nobody is going to listen to these sorry you-know-whats. They're just not going to. So who's dumb enough to say, okay, it sure looks like they're talking about the QE again. I guess I'll buy the dollar yen. You're a freaking idiot if you did. Because all he did was just throw it right back in your face because nobody believes him anymore. The only way that the dollar yen can go higher is if they go full-on helicopter money. That's it. Amanda says, good morning, Paul. TGIF, I had an order in to buy Looney at 31.27, missed it by 3 pips, and now taken off cheap and to my week. Currency says, do you trade British pound CAD, head and shoulders formation? You know what? Great point. By currency, but I'll tell you what, who beat you to the post is Anders. And the crazy thing is, we were talking in the chat room, and I was dissecting the trade from yesterday, where I was getting short dollar CAD above 132. And I'm like, whoa, wait a minute. I see something developing. Hold on. And I post a chart. Well, lo and behold, Anders had already posted the chart of a head and shoulders, a potential head and shoulders, like 20 minutes before me. It's just that we were talking on we were doing like a webinar on the Beacon Trader, and we'd had a couple issues the last couple of days with audio. So I saw him post a chart, but I was so busy trying to make sure everything's going to work, the audio, blah, blah, blah. I didn't even notice. So here I am. Whoa, wait a minute, because we're dissecting the trade on dollar CAD, and why I was getting short yesterday. And I'm like, whoa, wait a minute, folks. I think I see something. Anders had already posted the chart like 20 minutes before then. He was looking for head and shoulders. But anyway, we'll look at that dollar CAD. And so good spot by currency. He's stating head and shoulders on cable CAD, or not cable CAD, pound CAD. And we were seeing it in the dollar CAD. So that's actually good news, because that actually, there could be an extra little juice in there. What I'm looking for, this is actually a good area to play into that, is if we can get a short-term bottom in crude, which crude is still weak, then if we get a short-term bottom and a pop in crude, that will send the dollar CAD much lower. So we'll take a look at this. But anyway, we'll look at this story. It's time for all that. The yen gained 0.2 against the dollar in early trade in Europe, down 0.7. If anything, okay, the Fed is looming in about 5 days. Until we have doubt that the dollar is going to swing either way, said Alexander Dolce, a strategist at Spanish Bank in BBA London. If anything, we may see more about the yen, and this is what the option market is priced in. Nobody gives a rat's, about the yen. Given that the BOJ has a good track record for disappointing, exactly. For disappointing the market since the start of the year, the risk is the yen can strengthen a little bit against the other majors. Now, this is someone who actually said something that was worth a doggone. With the track record for disappointing the market, nobody's going to believe these guys. I mean, if you got long on NFP day and you thought you got a pretty good buy, let's say you got long at 390 or 380, and the market's at 432, and you're like, man, this ain't next week. We are blasting higher. And then you get the in-house fighting in the government over QE, and you lose 300 pips. Who's going to come in and immediately buy that? Oh, you might buy it on a scalp or something like that. And I mean, not my kind of scalp, but a little bit more of a scalp. I mean, like maybe 35 pips or something like that, 40 pips. Nobody's going to buy into this crap. And on top of that, the bonds are put in a double bottom. And we can take a look at that. And we came into that area, I was talking about the 38%. I was actually looking to be a buyer. I think it's like going to be at that point I was going to sell the gold or something. I mean, if we got to the 64.14 and we came up like, it wasn't even that much, like 3 pips shy. I guess I was trying to really stretch it for all it's worth, trying to cherry pick the doggone thing. But we're at the highs right now at 66.08. The actual high is 66.09. And the reactionary high previously, I have to look on the chart right now. Um, Here we go. The reactionary high was 66.13. So we could take that out. And so there goes the rate story on the yen. So no, anyone who believes in this trade is just crazy. Freaking crazy. I'm not saying it can't rally. It can rally into the BOJ meeting, but but it's going to be a sell opportunity. And you're seeing that right now. Nobody believes them. Let's see. Okay, this guy said he had a target of 108 yen for the end of the year, predicated on the Fed raising interest rates in December, although that seems subject to risk from the November presidential election. Explicitly, they can't say anything about Trump, he said, but we think they would see further the reaction of the market to figure out what to do on interest rates if he were to win. The Fed and the BOJ issue their decisions on interest rates, other policy parameters next Wednesday, blah, 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 blah. Okay? Let's see. What I try and do is, as some of y'all knew, people talking to go, well, hurry up and get to the charts. What I do is I try and go over the stories so they kind of give you a theme on which to hang your hat on. That way, like if you were seeing that and thinking, okay, well, you know what? Maybe I won't be shorting dollar yen, but maybe at least I won't be a sucker and buying it. Or if I do buy it, I'll make sure to get out. So these stories kind of provide you a theme for the day or what the market may be looking at. Of course, like I said, on Fridays, you always have to be careful. We already know that those are taking a pretty good whack. Emerging market currencies. Let's go and see what reports are today. We got CPI, Canadian manufacturing. Oh, and Michigan, preliminary Michigan consumer confidence, which will have some bearing. So let's go in and move into the charts. Hang on. Okay. So here we are. I guess we'll jump on real quick in the dollar CAD. And currency said he noticed a head and shoulders in the pound versus the CAD. And I thought I was being like, whoa, wait a minute. I think I see something. But Anders had already seen it before I did. But we what happened was I was discussing. Put this easier to see it this way. I was discussing my reason. Doggone it. I was discussing my reason for the short yesterday, and this is very key right in here, where we're coming at right now. But crude is still sucking wind. You see that right now, right here. So that's what some people be patient, But this is a very good area. And CAD is reacting very strongly right now. I mean, I was telling people yesterday, it's reacting when I was on, when the trade didn't look good, it played out really well. I said, it's reacting pip for tick with the crude oil market right now. But the reason is, and we'll go into yesterday's trade, I was already looking about the market kind of running out of gas. And we were looking for crude, for dollar CAD short setups. Not yesterday, the day before. And so we were talking about this area, and we saw the market come down in here and come back up. So it looked like, wow, you know. And so that trade really played out. It did play out. I wasn't in it. Honestly, I don't even remember what I was trading, but I wasn't in it. I saw it when it was already going down. And so the market came back very smartly. So obviously you wouldn't denote this as a hammer bottom near a top. We do that near a low or whatever. We'll see if there's a low, if there's some kind of hammer or something like that. But I don't see anything. But anyway, it's usually near a low. But when you look at it on a very shorter term basis, you're saying, wow, look how it came back. Yeah, that looks pretty good. And then we had this bar here. And my thinking was, this kind of looks like basically like a hanging man to me. Okay, the body's a little bit thicker. If it was a little bit less, it would. But anyway, the point is, so they had the shorts on the ropes. So when we pushed higher, I thought they should have exploded. That's what some Blake. They should have exploded and taken off. So as we rolled into yesterday, we'd already seen a sharp sell-off in the crude oil market. Remember, they had the EIA report that was here. We take off like a banshee, and then we turn around and give it all back. So they really had the shorts on the ropes. We could have exploded higher. My take was they should have exploded higher, and they didn't. So when we slid back in here, I said, hey, look, this is going to be a good trade for short. And once we got about 132, everything looked good, and I took a short live on the air. And the reason I took the short was because of this. From a technical setup, was here. And that's what we're doing to explain it when I saw the head and shoulders, although Anders had actually seen it before I did. You see right here, this is a bearish engulfing bar. I don't care about the wicks. Some people do. I don't give a rat's, you know what, about the frickin' wicks. I only look at the body. That's all I care about, okay? So you see, even though it was just a hair, and I really am splitting hairs here. But you can see, even though it's just by just a hair, basically almost right there at the tip, but who cares? It engulfed this entire body. You see what I'm saying? It engulfs that. That's what set me up for, my thoughts were a move lower with the idea that crude was going to go in and bottom. I didn't think, after the horrible action here on Wednesday, I didn't think we were going to go gangbusters, but I thought we'd probably be looking at maybe like about a 90 tick rally, okay? So that was my take on why I wanted to go in and be, I thought that it was a good trade. And my stops, one of the guys in the room asked me, what are your stops just above the day's highs? And I told him, yeah, exactly, just above these highs right in here. We'll move this, get over here. So while we were explaining the trade, that's when I said, whoa, I think I see something. Well, I got to give props to Anders because he saw it before I did. But I saw this head and shoulders. And obviously, currency sees it too. Walter says, good morning, Walter. And he sees it on a pound versus the CAD. So anyway, so getting back to the trade to finish up, I was looking at this 31.31 area, okay? And I thought on this bar, on this move, when I was talking to the guys in the chat room on Wednesday, I thought we would get to 31.31. Now, when I talked on this trade yesterday, I was telling Blake, I said, hey, look, this is going to be a good area for people to get long, maybe just below 31. But for this move, any moves, I think we can take out 31.31, which we got to it. We didn't take it out, but I got the hell out of Dodge as soon as we came down here. I got out. right there when we broke 40. It was just barely broke 40, and boom, I was gone. And I guess that worked out okay because I thought, you know what, they'll probably end up pushing lower, but I don't care. But anyway, the trade turned out okay. But crude continued to be in trouble, and that's why we've been holding steady. Now, the dollar CAD's working higher because crude continues to really suck here. Although we're getting a little bit, just a little bit of action here, I think you could probably, I'm trying to play a little bit more cautious. And the problem I don't like is it's a Friday. I don't want to see a good weekly close, and we can get that. So I would caution anyone trying to get short at this point. Amanda says, I'm not the best, and she's talking about herself, I'm not the best at cup and handles, but looking at that dollar CAD, could it be a cup and handle? Well, Blake's been saying cup and handle for a while. And here's the tricky thing. That's what I'm saying is like, I like to play short-term trades. So one of the things I look at the technicals, but I look at the price action. And when I say price action, not just what this bar did, but my take was, wow, we had a chance to really get blown and going here. So when we took out 32.18, my take was we should have blown doors, okay? Because they had the shorts trapped from here, this trade, right in here. So if they didn't do that, I thought that left the trade suspect. Meaning, if we got a rally in crude, which I was looking for a rally in crude, we didn't get it. But obviously, we must have rolled over into crude. But if we didn't get it, see, they had to roll over here. If we didn't get it, then the dollar CAD could have taken off. So I was looking for a little bit of a rally in crude yesterday morning, which initially got it, then started giving it back. So I said, hey, look. All I want to do is put my stop above the day's highs, this session high right here. If it gets above it, forget it. I think I had it actually at 32.25 or something or whatever. But anyway, it all worked out, okay? So here's the deal. Blake has a cup and handle, and it got met. And someone else, I don't know who he was talking about, they have a real big cup and handle, and I think it goes to like 33.25 or something like that, okay? Here's the deal, and so when I was talking about the price action, I was saying they should have blown doors on the shorts from here, okay? And said, oh my God, I never should have shorted the dollar CAD. I was so stupid. Oh my God, how much higher can they go? And we talked about the 32.18 on Wednesday when the market kept wanting to go higher and go, hey, if it gets higher, then that next target will be 18. I think it'll be a good area. Well, they had the people in trouble here, and I thought they should have made the most of it. They should have at least taken out 32.56. So we did get it going and get the pullback. And I thought the price action should have been better. That's why I thought it had a good risk reward. Now that being said, you see how we're above this 31.91? But crude is still taking it in the shorts. You see what I'm saying? We're still pushing lower here. We've rolled over into the new contract where we're pushing, see how we're pushing lower. So this morning I was talking about this potential head and shoulders. And I said, if crude can bottom. Now, if it was me, I'm saying this: if it wasn't Friday, I'd be taking a short against this 31.91. If it wasn't Friday, but here's the deal: it's Friday, so you have to be wary of the weekly close. So let's go here into a weekly. I don't want to jack up my stuff. Hang on, let me just. So everybody's all on the same page. Some of y'all are going to know and say, yeah, I already know. But let's take a look on the weekly. You see, we have a chance to push even higher. And if we close above 31.75, that's going to be very bullish on a weekly. So that's why I'm like, no. If it was like a Wednesday, then I would have said, I'll take this. But I would have waited for crude to get a little bit better. You see what I'm saying? Because crude's really sucking wind right now. And I said that in the chat thing. I said, hey, look, if we can get a short-term bottom, not a bottom, just a short-term bottom in crude that will have this trade, a potential head and shoulders, come to fruition. But right now, crude's stuck in wind, and let's put it in perspective here. Now look at crude on a weekly basis. You see, that's looking pretty bearish on this weekly chart. It's going to close even below the other weekly. So right now, you got to put this trade on hold unless we have crude really starting to come about. But right now, going into a Friday, we can't be finding the dollar CAD right now. If the market would have finished down in here, let's say 31.75, whatever, 31.70, and next week crude started moving higher, then you got something. For right now, we just don't. And right now, this market is getting too high for it to be. It's starting to negate that head and shoulders pattern because it really shouldn't move. Let me move back to crude. It really shouldn't be this high up. Right now, against this 31.9 is what should be as good as it should get, and it's still trying to press higher. But the reason it's pressing higher because they got shorts on the ropes. Because we're coming into a Friday, got to be very, 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 very careful. So anyway, that's a take on that one. Spent a good chunk of the morning on this, but I thought it was good to cover it. Everybody can kind of be all on the same page. But I am always wary on a Friday, very wary, because anybody that's on the wrong side of the market is just like the bonds. I'll give you an example. Let's go into that real quickly, and then we'll go on break. This is a perfect example. And we'll leave it at that, and we'll go on break. You see here in the bonds, we had, this is on a 4-hour chart, very good support in here. We've set a double bottom, and 64.14 is at 38% of the move of 145.25 to 175.29. So you get a double bottom, you come into the 38%. We missed it by about 3 pips, but 3 ticks, but the market's rallying. So now let's look at it on a shorter term basis. Look at it here on the 15-minute. Here's that double bottom I'm talking about. Now, obviously, this was a double bottom. And the bonds, I keep telling people, they trade nicely. This was in Asia, and look at this run. But on a bigger scope, because it's only on a 15-minute chart, on a bigger scope, there. And there. You see, you got a double bottom, and more importantly, you take out the lows here. And there's no, you take out the lows. Usually on Fridays we do tutorials, and there's nothing happening in the market right now anyway. But here's the deal: you've got a double bottom now. And I had this one on the Asia, and we saw very nice rally. But on a bigger scope, you see here, you've got a double bottom here. More importantly, you took out the prior low, and you just didn't get the follow through. There was a dip to take out the lows, and then from there, it's blue skies. Well, we're into a Friday, and look at us, we're right on the highs. And this is the reactionary high here. So I think it's 66.13, okay? So you get a double bottom here. You took out the prior lows. You come into a key fib So this thing can move higher. So anybody that's short and said, "Oh, we're gonna go higher. This isn't a short-term move. It's gonna keep on going." Well, now they're in trouble, and they're like, "Oh my God! I mean, if it takes out this high and closes, that'll confirm the double bottom here. Oh my goodness! I better not be in this short. It's gonna provide more juice for this move to further accelerate." I mean, whether it does or doesn't, and we've got some pretty good resistance here. You can see here, it's got the shorts in trouble. So when you come back, I'm going to take our break. So when you come back to dollar CAD, anyone who's short is very worried right here, because remember we talked about the weekly close. Now, I was thinking, and like I said, Andrew saw it first, but when I saw this, I'm like, wow, this head and shoulders. But I told people that's predicated on the crude finding a short-term bottom. I don't see no freaking short-term bottom here at the moment. That's what I'm saying for me, had it been like a Wednesday or whatever, I'd be happy to take the 31.90, provided we got crude to stabilize. But here's the problem with crude too, and we just went over that. Here's the weekly chart. It's going to take out the prior 2 weeks lows at this point. The low here and the low here. So at this point, this doesn't look good. And we needed that to look good in order to get the pressure on the bulls. And right now, and you see, now it's flipped the other way. Now anyone who is short, just like in the bonds, they're thinking the same way with the bonds. Well, it's a little bit different setup, but they're saying, oh my God, if this thing closes above here, we could really take off. That's my point. Although, with the cup and handle that Amanda's talking about, on that bigger cup and handle, Blake had one at 132 something lower 132. So it played out for him. But he said there was another guy in his chat room, in the Wall Street chat room, that was looking at a cup and handle that takes it up to like I think it's 133. So once again, you have to be careful with these markets on a Friday. Well, we're way over time now, and I want to take my break. So we will take a break now. Okay, everybody, welcome back to the European crossover. And Whit says, do you think the Fed is really worried that a 25% increase will hurt the economy? Seems so little in the grand scheme. You're absolutely right. It is very little in the grand scheme. It's, the focus has been, where a lot of people have missed it and been wrong, the focus has been just on specifically job growth and wage gain growth. They've looked at other things, but and risk, like the potential for Brexit would have been. But I think that they could raise rates. It doesn't look likely at this point that they will. Those ISM numbers that came in ISM services, which came in contraction, weren't good. They're playing it very safe, and it's hard to argue. They've played it really safe and light. I mean, they stopped the QE. I mean, it's not that they're reinvesting the profits or proceeds, but they're not doing QE, still doing QE like, ECB, BOJ. Obviously, the BOE has something going on now, but theirs was, tied to the concerns about Brexit. But I don't think 25% basis increase would, but they played it super cautious, and they've seen the fruits of their labor. With the job growth coming back pretty well, and people question whether the jobs pay as much as they used to, or whatever. But like I said, we do have 4.9% unemployment, so it's hard to argue that what their actions haven't been good. You see what I'm saying? So I'll have to see. Once again, we'll look at that dollar CAD, and like I said, the potential for the head and shoulders, but that's being negated as long as we get above this 31.91. But the bigger problem is, and like I said, it was moving, as I said yesterday in the chat room, it was moving pip for tick with the crude oil. And until crude oil can pull its head out of the toilet, there's nothing it can do. Now we have some support here, but like I said, here's the problem: is you've got a Friday close, and nobody wants to be on the wrong side of a Friday close. Because when you're at a high, you see whether you're high or a low, it just garners that much more momentum. Because you have to figure anybody, they want to get out, and then they're saying, even if they're bearish, they'll say, well, I'll wait and see how we come out on Monday, which gives it more juice to go even higher. So there's a potential here, but we've rallied back. But like I said, I covered down here. It was a short-term trade, said it all along. But we'll see what happens. But going into a Friday close, it looks good. Gold weakening again, although it sat there for a while. We rallied at 61%. Was looking for a low there. That played out well, although it didn't get to my price, and I had to chase the market. My fill wasn't that great. I ended up getting out at 17, which I made money on it. I saw 20 as the bias pivot, which it sat there for a little bit, and then once it got past it, man, it blew doors and rallied up to 24.80. But that was a 61%, so we saw a nice pullback, and I caught a little bit on the short side, but very little. So, but let's take a look here at the cable, and yeah, I guess I threw this off because, to me, in all intents and purposes, it had satisfied the head and shoulders, which is, I had 31.25. I think Blake had something like 31.35, which would have hit it right there. But so I don't know what it's going to do. I mean, we're coming to a Friday close, like Blake's been saying. It's still bearish all along. I don't have any take on this thing right now. I mean, I guess it can go back to this 30.86. If it goes here, if it's going to move lower, then I think this will be the key area here. It's not going to stop there, so it'd probably be like to right in here, the 30.50. Maybe we can come down to this 30.19. So if it's going to break lower, I guess I have to go with this right here. And let's take a look at it on a fib. I don't have a take with on it. I mean, I played part of this on the way down, but I had a crappy ass fill. It was my own freaking fault. I got short like here and had to watch it go all the way up in my grill, and it was just, it just didn't want to move. And it's just, I mean, I guess, like I said, I'm very happy that it didn't get taken out, because I thought my stop was right up in here. But I don't know about this thing. But it certainly looks like it's going to head lower. Let's see where we'll have a fib. 30.87 is 61%. We might get a bounce there, but I like this 30.19. I don't know if it'll make it down to 29.92. So that's a 78%, and the cable likes to trade at these 78%. Let's go and mark it off. I wouldn't say this is going to get there, but yeah, I just don't have a good take on this cable right now. I don't. So, but I'll mark it off. I really don't care about this because this is a bias pivot, so that would coincide with the 61%. So you probably find some support. I guess we'll mark this off only because if we drop here and we take out this low, you probably will find some support here. But my guess is they would want to take out the lows here before you found some buying. So we could test 30.50, and then that 30.86 would have been the 61%, and they get a bounce. But I just don't know. The 30.19 is a bias pivot from back here. I just don't have a real good take on this cable. I really don't. I mean, I guess it put gun to head. I guess I'd rather be short, but I just don't know about this thing. But we're going to mark off the fibs. I'm surprised to see gold already weakening that much. Especially with the bonds having come back. So it's really That was one of the reasons why. Yeah, I had my limit at 11.17. I'll be doggone if they didn't go and fill me, because I thought that they were going to break lower from 12.80, and I thought, and then they only broke to 70 cents lower, and it looked like it felt like a move that was going to go up about $1.50, clean everybody out in a nice rally. So I ended up having to chase that dog. Hang on a moment. My guess is we'd have to, if we come down here, it's not going to be satisfied unless we test 30.50 now. So if I had an initial target, it'd be 30.50, because they're not going to stop here, even though it's the top of the zone. My guess is they'd come down here, test 30.50, which would take out these lows, and then it could rally back up some, and then people would say, okay, well, they hit the 61%, but my guess 30.50. But before it's all said and done, I guess I've got 30.19. I guess if it gets down here, it's going to scare a lot of people. They're going to be thinking we're going to take out the lows. I just don't know. I don't have a good feel on what this thing's going to do right now. I really don't. I thought this head and shoulders would have come to fruition very quickly, and I didn't even get short till right in here. And I thought, okay, they're going to break, and then it goes up against me, and it just. Actually, I think, honestly, I think I got short right here. So you can see I had to sit on that dog forever, and then it came down to 32.40, and I had a chance to get out, and I thought, okay, now it's going to break. It does, and it comes back here, and this is a hammer right here, and then I have to put up with this all the way. I mean, it just absolutely sucked. I was happy to get out. The dollar yen. Look, folks, you can believe whatever you want. I already mentioned on Twitter, and I will go on and say, look, this trade is over. It's done for. I've been saying this for a while, so it's not like as if I hadn't been saying it, and it's not like I've been proven wrong, because I haven't. I already said this trade is over, done, finito, game over. As the old Monday Night Football saying used to say, turn out the lights, the party's over. Okay? That's it. If you think it's going higher, you're smoking hopium. Okay? You're smoking hopium. Okay? And here's the reason why. Now, I trade technicals, and most of y'all trade the technicals, but I tell you, I always like to look at the theme, what's the driving theme of a market. So I'm going to play this out, and this will be the last doggone time we bring it up. Sound like a broken record. So I think the BOJ did really well. When the market was coming apart, they kept the trap shut. Okay? Like I said, in this whole area here, I think I might have seen 2 comments, but I saw 1 comment. They didn't say anything other than they were concerned if the market starts to accelerate, blah, 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 and all this other stuff, okay? And then, as I told you, and we'll lay it out again for the umpteenth time, Yellen and Fisher, for a football analogy point of view, Yellen and Fisher at Jackson Hole, let's move this closer. They threw the football down 60 yards downfield. They really helped, send the yen lower because they were sending the dollar higher. They threw the ball 60 yards down the field. Then Hamada and Suga get on the wires within 2 hours of each other, and they send the ball down to about the 20-yard line. Right here. And then the market kind of pulls back and forth or whatever. It actually goes even higher the following day, okay? Then we get NFP day, and I was looking to be a buyer when we were live. Right in here. Because I was thinking, okay, they'll take out 261. And Blake's like, man, it doesn't look like a stop. It's going to keep going higher. I'm like, no way, you got to be joking. Not like I didn't think it could be. I was like, no way, you're going to keep on rallying from there, not even come back here. And so on NFP Friday, look at him. It's at 432. It looks like a freaking champ. Morgan Stanley's looking for 108 before even the BOJ meeting. Okay? So here's Friday. The thing looks like a freaking champ. I mean, it looks like, oh my goodness. Man, too bad we didn't get filled. This thing is going to take off. Where does it go to? Probably 550, and then it's going to blah, 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 whatever. So we come to the next week, which was last week, and we get in-house fighting by the stupid Japanese government. In-house fighting about what with QE and the yen. So, because of that in-house fighting, you see the market fall and fall. I saw people pick it up here, actually here, and here on the way down. I thought I was a freaking champ. I waited till here to buy. I was only looking for 20 pips and let the market go on in, and then I'd come back in. I bought it right there at 226. I think it's 227. I was only looking for 20 pips. I'd come back in. At one point, I was up 17 pips. I thought, okay, it's a done deal. I mean, I got my limit already there. I'm going to take off 20 pips, and I'll come back in and test it, whatever like that. It runs out of gas when I'm 17 pips to the good, and we slide into the teens. We slide all the way back down. Then we're in the teens. I'm like, well, it's okay. I mean, I think it'll be okay. And then we're at 205, and I go, well, this thing's not looking good. So I got my stop just below here, and I get stopped out, and the market continues to go lower. I mean, I would have bought it, but I wasn't in front of my screen when it went down all the way here. Another 50, 60 pips lower. The market, it actually popped back up, whatever. Here's the deal. We lost 300 pips from here to here. Who the hell is going to go in and say, I think I'm going to buy the gold here and we're going right back up? After they just got worked for 300 pips. Not saying that they were long here, but I'm sure there were people that were long here, and look at that. They're not buying the story. So then we get U.S. rates rally with so we saw the bonds sell off. That helped them here, but then we come right back down. And then here's where this is where I said it's over. The trade's over. Party's over. Turn out the lights. So we get this rally back up here to the 61% and look at it. It's over. And on top of that, bonds are rallying. So there goes your rate story. And we'll come back to the bonds real quick. And I'll tell you why this trade's not working. And obviously I'm taking it personal because the way I look at it is I didn't even chase the market. I didn't even buy the market on a 38%, 50%. I bought the market low. And I still lost money, and I was only looking for a little bit. So now here's the bonds. One of the reasons they work inversely, so with the bonds rallying and rates falling, there goes your rate story. Because if the bonds were falling and rates going higher, you could see the dollar yen work higher. We've got the bonds just ticks away from the reactionary high after putting in a double bottom. You've got nothing left to hang your hat on. You keep on and stay with that trade. You do whatever you want. I'm just saying is that trade doesn't make any sense. I mean, just here, look at it, folks. We're going at our lows. Keep smoking that hopium. Just keep smoking that hopium. Look, you don't F people over and then have them come right back. How stupid do you think people are? After you go in and work people over, it has a, Yellen and Fisher throw the ball 60 yards down the road, down the field. Hamada and Suga taking another 20 yards down to the 20-yard line. And the in-house fighting, the government, they fumble the ball on the 10-yard line right there. And we lose 300 pips. You don't lose 300 pips in a market and come right back up to make new highs. You just don't do it. The trade is over. It's not coming back unless they do full-on helicopter money. I said it 2 days ago, and it's come to fruition. This trade is over. As you said, like I said, you're just not going to go and do that. And then the one thing you could have had you hang your head on was U.S. rates. Well, U.S. rates are going lower after setting a double bottom. And finding support at the 38%. So that there's just, I think that the market could rally into the BOJ, but it's going to be a sell to rally. Unless they go full on helicopter money. That's my take on that. And gold continues to weaken here. I was surprised, a little bit surprised here after we put in that low. We're working lower, but the dollar is pushing higher. You can see the Swissy here, which I always say, if you want to know what's going on in the euro, look at the Swissy. See, look at the high here, look at the low here, look at the roll up, look at the roll down. They're trading inversely. So, but that's going to take obviously the dollar strengthening. We're seeing U.S. rates continue to move move lower, and we're seeing the gold work lower, the euro work lower, dollar Swiss move higher, dollar CAD's on its highs, and that does not bode well for the dollar yet.
Yeah, this dollar yen is weak, man. Weak
system. Well,